Good morning, evening, afternoon, and happy New Year to everyone on the call. And thank you so much for hosting me. So I will lead you into this conversation. I call it a conversation because I believe there's various people in the room that have different expertise, and I think we'll obviously learn from each other. So that's just a summary of who I am. I've just given a brief profile. I won't spend too much time on this, but I've been in banking for 19 years and across investment banking. And I think my background is market risk, financial markets, and a bit of economics here and there. So I will start with what's very topical right now in the world. So we're in 2025. What should we expect? I think much of what we should expect in 2025 is driven by posture in the US, which is the largest economy in the world. So Donald Trump is going to take office on the 20th of January, which is this month. There's quite a lot of uncertainty, especially around geopolitics. The world is in a state of war. That explains why crude prices have continued to be volatile, and that tend to manifest in fuel prices. Supply chains, food prices are high because of potash. Potash is used to manufacture fertilizer because of the Russia-Ukraine war. So we are looking at the Israeli-Hamas war, Russo-Ukraine war, the Houthi attacks in the Red Sea, and all these are impacting supply chains, and that manifests in what we call inflation. Prices of goods, delivery times take longer than usual. So with the coming of Donald Trump, there's been promises around him having to address the war. And if the war does go, it will definitely give economies a positive cue, but it's a wait and see. The second point of call would be around green tech. I think this is very important because it speaks to what we should expect for green metals, including copper. Whenever there's a new president in the US, they always come with this infrastructure program and investment that gives copper a positive cue, and you can expect that copper will continue to trade healthy. We're looking at anywhere between $10,000 to $12,000 a metric ton in the medium to the long term. Africa resource focus. So there's this view around aid eventually fading. And then there's also a view around what will happen in terms of Africa funding projects. I mean, the US funding projects in Africa, what is really going to happen. So this is called the Prosper Africa 2.0. Protectionism and global trade. Donald Trump is looking to impose tariffs, especially on Chinese goods. And tariffs are inflationary. And we expect that if this happens, then China will also retaliate in the semiconductor market. So it's a very interesting point of call. Climate policy and US IMF funding is something we can look out for. Judging from Donald Trump's first term in office, I think he called climate change a hoax, but there is a suspicion that his partnership with the likes of Elon Musk, who are running the likes of Tesla, would actually change his view when it comes to climate change. And hopefully, if that happens, then we should see continuation of the US policy when it comes to climate change. US IMF funding is another critical area. I think Donald Trump has always been antagonistic. He felt as though the US was contributing too much to the IMF pool because those monies were going to other countries, and he's more interested in making the US a big power once again. Dollar strength is another interesting feature. The moment he won the election, dollar strength was very evident. And by default, when the dollar strengthens, you expect that emerging market currencies weaken. So is that what we should be expecting? It's something to look out for. Monetary policy trends. Of course, there is a clear independence between monetary policy authorities and the fiscal authorities in the US, and we can clearly see that the US Fed is cutting rates to stimulate employment and to grow the economy to cushion some of the potential recessionary shocks, and that is expected to continue irrespective of what Donald Trump's policies are. I thought I should just give a high-level overview of what we should expect in emerging markets, because clearly it's been spelt out that the US wants to do business with Africa rather than give it aid. That explains why US President outgoing did make a stop over from Cape Verde. He stopped over in Angola and met 3 African presidents, that's Zambian president, DRC, and the Angolan president, to support the Lobito corridor, which is a rail line that will see opening up of the Western ports to transport minerals and food, and it opens up markets. But we've also seen the Chinese retaliate as well to pledge $1 billion in refurbishing the Tazara rail line as well. So we are caught up in the middle. We have green metals, we have copper, cobalt, we have manganese, and quite a number of green metals that we have to offer. So that's merely just a high-level overview of the global uncertainty and what we should expect before we can get into the domestic market, Zambia. Those graphs that I share are just showing what crude prices are. We talked about the impact of the war on the oil markets. Dollar strength, we spoke about. Expectations around what copper would trade for in the medium to the long term, $10,000 to $12,000 a metric ton, which is good for Zambia, especially that we are at a very critical stage in terms of mining economic life cycle. And food prices as well. I think food was very much elevated in COVID period. And when the war also started between Russia and Ukraine. So that gave a shock to potash prices and wheat and ore, and that manifested in global food prices. That's the highest that the world has pretty much ever seen. We move to Zambia. We're in 2025. What are some of the targets? Summary, we expect that this economy should grow by 6.2%. This was predicted and forecast by the IMF. An initial forecast was 6.6% by the Ministry of Finance, but the IMF came in citing headwinds that are very much skewed towards drought, impacting agricultural output and drought effects on electricity generation. So Zambia still grapples with a power deficit of about 1,300 megawatts. We're currently importing power and it's expensive because we're in the middle of an energy reform where prices of electricity are skewing towards cost reflectiveness, and this should complete in 2027. Suffice to say, we should expect that electricity prices are going to be increasing almost every year until 2027. We actually have the lowest electricity tariffs in Africa, and that has hampered investment in the sector. This last year, 2024, there was a forecast of 1.2%. It's a wait and see because the Central Statistics Office, that's ZAMSTATS, did release third quarter GDP growth of 2.5%. So if you add first, second, and third quarter, you see that Zambia expanded an average of 2.2%. So what's remaining is the fourth quarter, but it's also believed that the fourth quarter was the quarter that was hit the most in terms of the drought impact on electricity generation. FX reserves, Zambia has done fairly well. I would say FX reserves are sitting at 4.6 months of import cover. I think the initial target used to be 3 months, but Zambia exceeded this. There's a build-up. Most of the mining royalties are going straight to the central bank. Zambia has been getting these dollar injections as well from the IMF, extended credit facility, and other monies that we've been receiving, and that has helped show up that number to about 4.15 billion. And the informal target there is said to be right about just under 6 billion. So the central bank is trying to build that cushion. Narrowing the fiscal deficit to 3.1% is expected this year. However, some of these numbers may be questionable because we're looking at headwinds. Starting 1st of Jan, it's been raining continuously in most parts of the country, and that is spelling hope, because now it's about the quantum of rain that would determine how full water bodies will be to improve power generation, and at the same time give a positive cue to agricultural production. So that's what we are keen on looking to. So we're coming from 6.4%, which was just the forecast, but given that we had a supplementary budget and a reallocation of fiscal spend, we expect that that number should pretty much go up, but just be slightly under 7%. There is a target to limit net domestic borrowing. So the rationale behind limiting domestic borrowing is that the government has overcrowded the domestic money market. So if you have a government that overcrowds the domestic money market, this tends to push the yield curve up, and that's the answer to why interest rates are high. So to bring the curve down to lower interest rates, we need to see less of government borrowing on the domestic money market so that that liquidity can then find a home in the private sector, which ideally is supposed to drive economic growth. Copper production target 3 million metric tons by 2031. This target has shifted to 2033. It's been argued that given the production that we saw last year, first 8 months, Zambia had produced 475,000 metric tons, and the forecast was that by end of year, production would definitely be below 720,000 metric tons. So from 720 to shoot up to 3 million metric tons is really going to take a lot. It's going to take improvements in energy generation because you need base load to generate, to support mining. And at the same time, we will need the investments that have been pledged in a number of mines to actualize. So we've seen quite some improvements with the likes of KCM, that I know that production is sort of starting here. The likes of Mopani, we're looking at the China Jiangxi mine, we're looking at Shaft 28, that is dewatering, and we expect to see production by the end of next year. There's the Moxico in Mumbwa, and quite a number of mines, but these have to start pushing out production. So it takes quite a bit of time for investment to go into a mine in the ground and to come out in form of increased production. So the target is that by 2027, we should see production hitting 1 million metric tons, and thereafter to see it sort of increasing. The price of copper is very lucrative right now, but I think what works against Zambia is the current levels of production have hampered and impacted the cash flow generating capacity of the governments. Keeping inflation within 6 to 8% target band. It is said that bringing inflation to single digit may be a mirage for 2025 this year. Reason being, there's quite a number of factors driving inflation. You've got drought manifesting in energy deficits. Energy prices are going up in terms of electricity. We just had a hike in electricity prices. That's already reflecting in inflation. Food prices have gone up because of food scarcity as a consequence of decline in agricultural production. The exchange rate has been another topical issue because it tends to generate cost push inflationary effects. So when your exchange rate weakens and you are an importer, we tend to take a negative cue from that as well. So we've got a lot of factors that are pushing in and keeping inflation elevated. December closed at 16.7%. The central bank did step in to hike rates because their forward and the forecast did show that inflation was drifting further from the 6.6 to 8% target band, and it was sitting at 13.9% in 2025, and they had to bring it back to 12.7%, which is pretty much their target. So that is just a high level overview of what some macroeconomic targets would be. The next sections will now go into a little bit more detail in the specific sectors and some of the anchor sectors that will help drive growth. And I will highlight the risks and the opportunities that reside in these sectors. The first point of call would be sovereign outlook, the public sector, the government. What about them? The IMF article staff review did complete its review, and what really came out was that Zambia is still at risk of distress and default. We are not yet out of the woods. Yes, debt has been restructured, but the payments are now starting. We have to service debt. So the focus is that Zambia will only graduate to medium by 2027. But then the question is, what is supporting this action? Increased mining output in the medium to the long term. Mining is Zambia's low-hanging fruit. There's emphasis on mining because when mining booms, all other anchor sectors will definitely awaken overnight. We're looking at SME, supply business, we're looking at accommodation, we're looking at energy, we're looking at fuel, and all those. You can actually see that mining in itself is an anchor sector. So Zambia was granted $183 million disbursement in December, which is part of its extended credit facility. This is a facility that Zambia got from the IMF in 2022. This is a 38-month facility that expires in December this year. So we only have 10 months to expiry of the extended credit facility. And every quarter, the IMF does come in to do a review. They check the governance, they check the health of the public sector as well. And then they take that report to the board, and then the board can determine whether or not to disburse these amounts. So does Zambia see an IMF deal beyond October? What happens after October? Chances are that Zambia will be looking to extend the IMF facility. Why? This facility is one anchor facility that really helped Zambia restructure its debt. So the bondholders were able to accept a proposal based on the fact that Zambia is on an IMF program. So that gives some sort of comfort and hope. So because we still have a number of years to repay the bonds, chances are that, and Zambia is not yet out of the woods, the expectations are that we should be getting onto another IMF program after October to support confidence within the bond market and all. In terms of debt restructure, Zambia has done so well and has restructured 89% of its debt. That's both bilateral and private debt. However, there is 11% remaining, which is about $1.8 billion, which is very critical. Only when this piece is complete will the rating agencies now come and improve the long-term issuer rating. This is what we call a credit rating. So long-term issuer rating is still at selective default. Why should we care about a credit rating? That's the reason why we can't get fairly priced capital. When we try to access capital as banks, as the private sector, it's very expensive because then the question is, you are asked, what is your credit rating? And if your credit rating is terrible, then the premium that you are charged over and above the wholesale price of capital is high. So we need to ensure that that piece that is remaining is fully restructured for the full benefits of restructure to then manifest in fairly priced capital. And then if capital is fairly priced, then you expect that businesses will thrive because then they'll be able to get cheaper credit lines. How much did we pay in the bonds that were restructured? In my earlier remarks, I did mention that restructuring debt is one thing, but then a restructure means that you now need to start paying all that debt service that was arrested. We defaulted in COVID-19 pandemic, we stopped paying. We restructured this debt, the bondholders want and need their money. Last year in itself, bonds were restructured in June and they started trading fresh on the London Stock Exchange. We paid a total of $364.8 million in debt service and principal payments. This year, we will be paying another $599 million. That's about $600 million. So you can imagine what debt does. You can imagine if we didn't have that debt, this $600 million would have been going to other sectors of the economy. Because we had a drought and we were grappling with fiscal vulnerabilities, Zambia announced 2 supplementary budgets last year. The first budget was for 41.9 billion, which is just about $2.3 billion. And then in November, there was 11.8 billion kwacha. The 11.8 billion kwacha, I would like to explain, is merely a reallocation of spend. So think of you running a company and then your priorities have changed. And then you call up everyone and say, whoever hasn't used any of their budget lines, we're getting that money and we are reallocating it to where it matters the most in the company. That's exactly what this 11.8 billion kwacha is about. So they reallocated their fiscal purse to address domestic debt service, their outstanding bonds that need to be paid, and at the same time, domestic arrears. Domestic arrears, I like to define them very simple. It's merely the liquidity that we've starved the SME market. So there are companies that have done work for the government and were not paid and they are owed. And the government has been in this process of dismantling those arrears. That's one other area that kills growth. There was a budget that was presented for 217 billion, which was 22% higher than previous year. That's the budget that should drive the growth of 6% this year. So mining remains anchor. So in terms of sovereign posture, the government's cash flows are not as healthy as they should be. Why? Because there's been drought, and drought has really taken a toll on the coffers, because then Zambia had no option but to request for drought relief from the IMF, which was augmented in the extended credit facility, and we ended up getting about $389 million. So well, at the same time, the government has had to use whatever monies they have to cushion the effects of drought, which was a natural disaster and emergency as announced by the president. So you can understand from a cash flow perspective that because mining has remained muted, yes, there's been significant capex commitment, there's been significant investments that has gone into and is yet to go into the respective mines, but that investment has not yet actualized in increased production. And that's the reason why people would be thinking, we've heard these big numbers, but how come we're not getting to see the benefit of increased cash flows, increased effects on the market to impact the exchange rate? It does take quite some time. I've done a time series chart. This is my favorite slide. I show you from the time that we formally requested for an IMF facility, and I've just picked out the major milestones, and everything that is green is what has been ticked off and that has closed. So you can imagine this has been Zambia's journey to fiscal recovery. The ambers still show what is still pending. There's de-dollarization. There's this conversation around, should we stop using any other currency, but just to use the kwacha as legal tender in the country for all types of payments. This is still under discussion. It's a very topical issue, but the central bank is yet to give a position. And the last one would have expected by now that debt restructure would have completed, but then there's still the $1.8 billion dollars. So we have quite a number of milestones that have been completed. The actual agreements in terms of bilateral are now slowly coming in. There was a documentary and a report that showed that Zambia has signed about 1 or 2 out of 15. Not to worry, because these are now the specific ones. The blanket MOU with the creditor committee was already signed. It's now the individual agreements to be signed with each jurisdiction that is owed money as well. So those should start obviously to come in somewhat between first and the second quarter of this year. So before I proceed, I'm done with the sovereign outlook. I'm not so sure, sir, if there are any questions that we need to address before we can proceed to another sector.
Thank you. I see one hand up. Before I ask Ivy to step in, just by way of process in terms of how this presentation is going to go, for those who joined later, at the end of each sector, Mutusunga will pause for questions. And then if you have a question, please raise your hand using those little icons at the bottom. And then so that we do it in an orderly manner. So for now, Ivy has raised the hand. Ivy, please go ahead and ask a question.
Thank you, Mr. Moderator, and thank you, Mr. Zulu Tisunga, for a very, very informative presentation. 2 quick questions. The first one is regarding the drought, which you have ably and eloquently explained how it has impacted the economy. Has there been a cost done or in terms of what the real cost of the drought has been on the economy? I think it would probably be very helpful for interested parties internally in Zambia, locally, and also abroad to really get a grasp of what this drought has costed the country or the economy. That's my first question. The second one is regarding the third Amber anchor on your timeline, the 1.8 billion Sinosure date. Is there a timeline expectation as to when that will be actualized? I assume this is the China debt. I was thinking that maybe these are in the private market, but seeing that it seems to be debt that's procured from China, is there a timeline when Zambia is expecting that China will bow and do good to Zambia on this one? Thank you.
Thank you so much, ma'am, for those 2 questions. If you allow me to, let me start with the debt question. I think the initial indication was that we expect that this should close within the first quarter of 2025. So we're giving this up to March. I think this was a statement by the Minister of Finance in one of the sessions. So yeah. So and we remain confident that this is doable, because I think most of the work has pretty much been done. And the interesting thing about this is, if you look at this debt, you'd be very surprised that it's, private debt, you'd find that there's so many small companies and that, are involved. And I think that is why it's taking a bit of time. Has there been a cost, which is now the second question? Has there been a cost to this drought? A very difficult question that you've asked, but I can sort of answer it by sharing some of the numbers that I know, but I'll qualify the numbers. Reason being, when you're going through a debt, some of the effects are lagged. So I think that most experts shy away from giving a block number, or they wait until they're very sure about what to release. What I mean by lagged effects is that you could go through a drought now, but you will see the credit risk implications in the following year. If you go to agribusiness, for example, grazing lands could have been impacted, but then you start to see some of the effects, in the subsequent months or years to come. But what I can say is that when this drought first hit, Zambia had a figure of about just below $1 billion. That was like $940 million. And this was supposed to be an estimate at the time. But I would like to believe that the effects are actually greater than that, because it's eroded growth for the IMF to forecast 1.2%. Zambia is a country that in healthy years would grow 6.5 to 7%. So you can imagine 1.2% is quite a very low number. We've seen the central bank also come in to offer facilities to SMEs. I think in like 2 weeks ago, they announced a 5 billion kwacha facility, which is about $139 million. Of course, you would argue and say, is $130 million enough to cushion some of these impacts? So $139 million to cushion some of the credit risks, to allow banks to be able to get this money at concessionary rates and pass it on to customers who are affected by the drought at lower than usual rates as well, to just try and help them thrive, especially where they are sort of limping. I honestly do not have a like ballpark number and say the drought effects are this, because they manifest in so many spots. But I hope that my explanation does give you a bit of context.
Yes, it does. And I apologize if I could just maybe follow up. You explained it very well, and I understand it would be a big project, but that's something that, as somebody who seems to be very well versed in the sector and connected with the various institutions that will provide this information, does sound like something that probably is worth trying, even from a perspective of projecting. Obviously, when you project, you do a range, right? We expect the drought to cost us between 5 billion and 8 billion, and then you can revise later. A good example, for instance, Ukraine war is not even over, but they've been projecting the cost of the war. And that's kind of giving a ballpark idea of what the impact of this would be, and already giving them a standing when they're beginning to look at the rebuilding of the economy, how much they would need. Maybe it's too much to ask, but it would be very interesting, even if it were projected even if it's a wider range, then maybe restated if the impact is much bigger or lower, so that from the get-go, we are beginning to understand how much this has dented our economy. But thank you so much for your explanation. I really appreciate your presentation.
Thank you, ma'am. I'll take that as positive feedback, and yeah, it will get to the right officers, and then we'll try also and run some of these things in our models as well, just to get a view of what the impact would be of the same drought. Thank you.
Okay, thanks, Mutsunge. Thanks, Ivy. Let's take the last two questions, because we've got quite a bit of ground to cover. So we'll take a question from Chair and Victoria after Chair.
All right. Thank you so much, Mutsunge, for your presentation. My interest is always on copper. I was in Zambia just from last week. There is quite a bit of activity in Northwestern Province, in the copper belt, a lot of activity, I would say. And from your presentation today, you are saying that is just less than 1 million metric tons. Now, if government, I've always wondered, if government is saying 3 million in 8 years' time, do you think we have the infrastructure to help us deliver all this copper? What is the plan? What are the major infrastructure developments can we look at, which will help us deliver 3 million? Because 3 million is quite a bit. looking at less than 1 million, the congestions we have in the roads, and then 3 million will be barely moving. That's one. Number two question is, from what you presented so far, global members who are listening to you, what are the opportunities we should be looking at? Thank you.
Thank you. It's a good question that you've asked. In terms of activity, yes, there has been activity. Our roads are busy. But like I said earlier, mining is quite capital intensive and it requires time. So you're not going to get an investment today and expect to see a production increase tomorrow. So the 3 million metric tons is shared in a strategic document by the Ministry of Mines. It's exciting times for Zambia because some of the mines that are going to drive this 3 million metric tons include Mopani. An equity partner was just recently signed up, and Mopani has started to produce evidently. They did about, was it 200 tons in their first, that was somewhat last year. Konkola Copper Mines as well. Vedanta has pledged to inject $1.3 billion over the next 5 years. You have Lubambe, there's about 300 million there. And then you have the biggest project, which is the Barrick Super Pit. The Super Pit is poised to add close to 360,000 metric tons on an annual basis. There's FQM as well. There's a $1.3 billion. And then there's China Non-Ferrous Metal, which is the famous mine in Luanshya. So what I'm saying is, we've seen the investments. What you are seeing on the roads is equipment that's coming in. And that equipment obviously takes time to be set up. And the view is that we should start to see an improvement in production in the second half of this year. The first half of the year is usually a bit tricky for mines, because if it does rain, especially in that region, the Kalumbelas, when it does rain, mining slows down, but it tends to pick up afterwards. But real production, we should see an improvement in the second half of the year. And getting into 2026, I expect to see greater production. Will we make 3 million metric tons? Arguably, a lot of analysts, mining engineers feel that to get to 3 million metric tons, a lot needs to happen in terms of infrastructure. The biggest driver of that growth should be increased investment in power generation, because the mines don't use solar, they use base load. So increased base load, number one. And then secondly, it's really going to depend on these investments, but based on the stock of these investments I have mentioned, there is a belief that even if we don't get to 3 million metric tons, whatever number we're going to have will be definitely above 1.5 million metric tons. So it's one of those where they say you aim for, you aim for the constellation, but when you hit the stars, you still, celebrate. So it's really going to take a lot. But I would say we've seen the willpower, we have seen the investments trickle in, and we've seen a number of pledges. And I think that Zambia is slightly different in terms of perception. I would say the last 3 years have seen Zambia sort of make a rebound on the economic landscape in terms of things like mining taxes. I know that a lot can sort of be done, and there are new mines that are opening. There's quite a lot of exploration happening. I think there was a time we did not have one single mine in 15 years opened in Zambia, but that's different. We've also got the likes of cobalt as well. So exploration propensity has sort of increased, and hopefully we should get closer to 3 million metric tons by 2033. But it's quite a very, very stretch target to reach, looking at where we are from now. But what I would say is the positive out of this is that we should expect increased production.
Thank you.
Thank you. Can I ask Vicky? Vicky, you want to ask a question? Please go ahead.
Yes, thank you, Mr. Bota. Thank you, Mr. Zulu, for the broad overview of the economic situation in Zambia. My question is on the macroeconomic targets that have been set, the expectation that the net domestic borrowing should be reduced or rather limited to about 1.9% of GDP. In doing so, doesn't that open up more borrowing on the international market? Because as I see it, the more the government borrows from the domestic local market is a better way of improving the economy than when money flies out of the country. Maybe I'm misunderstanding it, but if you could just give a little bit more context to that statement. Thank you.
Thank you, ma'am, for that question. Does this mean that it's going to open us up to borrowing on the international market? No one is going to give us affordable money on the international markets if our long-term issuer rating is selective default. So that's one thing that you need to take into account. It's selective default right now. At some point, we could not even get any type of funding outside because no one wanted to do business with Zambia. It was high risk in terms of credit risk capacity. Limiting net domestic borrowing to 1% of GDP is actually really targeted towards not overusing the domestic money markets, which is the bond markets. So you don't expect to see quite a lot of overborrowing in the bond market because this is one thing that crowds the markets out and then keeps the curve elevated. And when the curve is elevated, interest rates are high. And when interest rates are high, the SME sector, the corporates are sort of deterred from getting affordable monies. Where is the government aiming to get monies? The budget, the 217 billion kwacha, is supposed to be funded 80.3% from domestic revenues. Where are these domestic revenues coming from? It's tax and other fees. So when we talk about tax and other fees, we are looking at if the mines are going to export copper, mineral royalties are in this bucket. There's quite some interesting developments that are happening right now. There's the property tax, transfer tax, there's a number of taxes that are coming up, and the tax base is also widening. And the Zambia Revenue Authority has been tasked to improve its tax collection. The belief is that a lot of people are not paying tax, and that's why the use of technology in that space is now kicking in. If you look at the Revenue Authority target, they exceeded their budget. I think they collected in excess of 213 billion. That was for last year, and that was a huge number. So it is believed that they have that level of capacity. So the limiting of domestic borrowing to 1.9% of GDP is not to open up the country to go and borrow from elsewhere. No, but it's to encourage the tax authorities to improve their collection efficiencies. And only when they improve their collection efficiencies will the government reduce its dependency on the money markets. Not to say that the government will not come to the domestic money markets. That's one of the risks that I raise in this presentation, to say, if you have overly ambitious targets, the risk is that if you don't meet those targets, you will then fall back on the domestic money markets, or you will end up having supplementary budgets. So at the current rate, the expectation is that with the widened tax base, we should see a better performance in terms of revenues coming from the tax authorities, and then that would reduce the burden. But look, the risks will always be there. We do not know the extent of the drought. It started raining, but if it stops raining, what will happen if the deficit widens? What will happen if agricultural produce gets worse? Then the government will still be pressed for cash. So as is, it's a good question you've asked, but I hope you understand the context in which I'm explaining it. It's merely to show that they are going to reduce dependence on the bonds and treasury bill markets as a source of raising funds to fund their fiscal programs. And that should keep the curve low and target to keep interest rates lower, ideally.
Okay, Vicky, are you happy?
Yes, I gave a thumbs up and a heart. Thank you.
Oh, okay. All right. Okay, thank you. Okay, thanks. Sunga, you can continue.
Thank you so much. So we move straight to energy. And when I talk about energy, I've lumped power and petroleum. So I'll start with petroleum, which is a lesser topical issue, and then we can deal with the power issue in detail. So in terms of petroleum markets, there's two factors that have kept fuel prices high. It's been crude prices on the international markets as a reflection of war. We always joke and say when a missile is fired in the Middle East, it hits a fuel tank in Zambia. So you can see that the impact of war has implications on crude prices and oil, and that's keeping petroleum prices up. There's a second factor, which is notorious in 2024, which is the exchange rate. So the exchange rate has really been under pressure. So the question is, why has the exchange rate been under pressure? The exchange rate has been under pressure because of supply and demand fundamentals. Let us start with supply. On the supply side, 70% of foreign exchange comes from the mines, and because the mines have remained mute in terms of production, there hasn't been much supply. So because there hasn't been much supply, there was a time when there was dollar scarcity in Zambia. And when you have scarcity of a commodity, its price goes up. And in this case, going up the price is what depreciation has been. We closed the year at right about 27. It was about 27, just below 28. So we're looking 27.6 and 28.22, which is significantly weak. So two factors is your exchange rate plus your crude prices that then determine petroleum prices on a monthly basis. 80% of the hikes we saw in 2024 were not because of international crude prices. They were more because of foreign exchange depreciation. And this has been a key driver of inflation. At some point, foreign exchange was really driving inflation up. I'll take you back to the global picture. Should the war effects subside, we are more prone to see lower crude prices, which should eventually translate into lower fuel prices. And that could be one solution to inflationary pressures that Zambia is facing. So it's something to look out for. So if Donald Trump is able to resolve the Russia-Ukraine impasse and as well tame the Israeli-Hamas war, then I would say we should see a quieter crude market that should obviously give a positive kick to Zambia's growth prospects. So in terms of energy, that is key. But as is higher energy prices, most businesses are bearing the brunt because we don't have power, and alternatively, we have to use generators that burn diesel, and diesel is expensive. So what we see now is the fuel cost also being borne by most businesses, because most businesses have to run gensets. Of course, yes, they have a cocktail of solar and the like, but if you have to run a bank, your data center needs a genset. So this has been the driver of operational costs this year. So you can see how the value chain moves from climate risk to climate change. It has not rained, dam levels low, power generation low, power deficit, to step in, you either get a genset, or what other businesses have been doing is they've tripled their workforce for the same period with which power is available to produce the same amount they should have produced under normal circumstances. And either way, their wage bills are high. And when we get to the section around Purchasing Managers Index, you then get to understand how costs have really hit business bottom lines. And because they've hit business bottom lines, if you speak to our auditor friends, they will tell you that tax contribution from corporates has been low. So it's the entire value chain. So from a petroleum perspective, that's what you should look at. I'll go straight into electricity. So dam levels are alarmingly low. We are looking at a Kariba that's got a capacity of about 3% now, compared to 15% a year ago today. What have we seen that has been positive out of this crisis? They say do not waste a crisis. The takeaway has been that Zambia saw energy reforms within a space of 1 year, yet the discussion around reforms has always been there since 1964. It had to take a drought to expedite open access, net metering, licensing, which took 90 days, now takes 48 hours. Wheeling, these are aspects of energy reforms that have now come in. However, there was an argument to say you can have all these reforms, but if your power is not cost reflective, then you would not have completed the entire equation. ZESCO applied for emergency tariff hikes, and that was granted in the fourth quarter of last year. Are our tariffs cost reflective? Not yet. It's a process. It's going to take up to 2027, according to the cost of service study. So there's quite a number of things that ZESCO needs to do. But if you hear the conversation around ZESCO, is that one, they're dealing with balance sheet stress. There's a number of projects that need to be completed, but there is no funding. The funding equation is also complicated by the fact that I know people ask questions and say, why aren't commercial banks funding such huge capital outlays? But the answer is the nature of commercial banks is that the deposits are short term that cannot be matched to lending money for 7 to 15 years. So it's a task and it's a role that is supposed to be played by a development bank. But we don't have a development bank in Zambia. So commercial banks are still playing in this space to do whatever they can within the short term, and they're focused more to support solar projects and a number of banks have come up within Africa. The AFDB, with the IFC wing of the World Bank as well. I thought I should just give that context because I get asked this question to say there are 16 banks in Zambia. Why aren't they just funding all those projects? It's a depositor mismatch. You can't get short-term deposits and go and lock them in 7 to 15 years. And that's been the biggest point of call. And even when Zambia wants to get funding from outside, the credit rating discussion kicks in. What is your credit rating? And that was my emphasis on the credit rating because I knew that we were going to get to this section to talk about the funding issue. So I move straight into a detailed note on power. We're sitting on a deficit of 1,300 megawatts. Exports have significantly been curtailed. There was an argument around why are we exporting power when we don't have power locally. A force majeure was declared, and it's complicated lives for the likes of the mines that signed agreements for stable power supply. And now you have mines getting power from as far as ESCOM and all that to be able to drive the production. And that's the reason why I said we need to address power generation to help the mines achieve the 3 million metric ton dream that would change Zambia's fortunes. What about the energy mix? So listening to ZESCO, the power utility has gone flat out they've got a pipeline of diversified energy sources that, one, speak to hydro. So we've got quite a number of hydro projects that I've listed there, the Chishimba, the Wapula Kalungwishi, West Lunga, Wapula, which is going to be a joint venture between DRC and Zambia. And you can see that these are hydro plants. Nothing wrong with hydro, but you can see what the concentration of hydro has done to us. 85% of Zambia's energy is hydro produced. And because it didn't rain, that concentration risk has cost Zambia. The second source would be solar projects. There's quite a number of projects. Luapula, 50 megawatts, Chisamba. This one will be ready in April this year. Siavonga, about 100 megawatts. They're looking for an equity partner. Like I said, balance sheet stress is a very, very common theme. They're looking for an equity partner. Per purchase agreements. So the interesting thing about this is that there's about 1,500 megawatts of core thermal plants that are in production. And that cover Mamba, which is the 300 megawatts. The Wonderful Group are doing 600 megawatts to be done in 2027. Sunshare is doing another 600 megawatts for 2028. These are the opportunity areas. So you can see that there's quite a lot of projects that have started, but they need funding. These are investment opportunities for those that are long cash, to lock in, to partner, and to make the energy generation dream a reality. The mining sector is projected between now and 2029 to grow and demand 1,900 megawatts towards the 3 million metric tons. So if you look at these factors, also take into account that the population is growing. So there is a deliberate shift to migrate the retail users onto solar, off the grid, and to leave baseload to manufacturing and to the mines. So the outlook is that in 2025, best case scenario is we should expect 12 hours of power and 12 hours of load shedding. This is coming from the back of, it hasn't rained much, so the Kafue Basin is supporting the Iteji Dam, which best case scenario should go up to 70%. This speaks to the Kafue Basin. But the Zambezi Basin is the one that is hit the hardest because the Zambezi Basin empties into the Kariba Dam, and the best that can do here is 32%. So it's actually true when they say you need 3 full rainy seasons to fill up the Kariba Dam. So drought is really a big issue. Correct pricing in tariffs is going to be very critical for Zambia. The only way Zambia will attract the required investment is if it prices its electricity correctly. You can't buy power for 24 cents and sell it at 6 cents. You are making a loss. These are the structural issues that the energy and power utility is having to deal with. So steps are being taken, but the question is, there's also awareness that's important because increasing tariffs is inflationary and it affects people's livelihoods. It's one of those where difficult steps are taken, but with a long-term view of addressing the power issue. I did a slide just shows you what the impact is of the recent tariff hike. The red is what we are paying now. The green is what we used to pay. So for a normal household, you would say 750 kilowatt hours to 1,000. But you can imagine those who use more power are paying more. So you can see previously, the last one is you were paying 6,000, but it goes all the way up to 16, and it's pretty much inflationary. I'll take any questions if there are any on the power slides.
Thanks, Mutusunge. Any questions? I'm expecting that this is where people will, had a big interest in Globo investing in the energy sector, looking at the deficit that's there, and Mutusunge has indicated that there's an opportunity. But he also mentioned something that a good number of these industries require base power. They are not driven by solar power because of the fluctuations. They require base power. So that's something to consider. Any questions? Any hands? I'm not seeing any. Okay. Mutsung, I think let's continue. Maybe people come up with questions a little later, but yeah.
All right. Thank you, sir. We move straight into mining. I think I talked a lot about mining in my opening remarks. First of all, just to state that it's one sector that the world is very much interested in, especially with its decarbonization drive. So there's this drive to decarbonize, which is an intervention to climate risks and replace fossil-propelled engines with ones that are pretty much more efficient. And those types of engines require green metals, copper, lithium, manganese, cobalt, and the like. So because of that, this is driving demand globally. Apparently, in 2025, we expect that the copper deficit will continue. We saw a copper deficit in 2024. The deficit does give support to the price of copper, and that's why I said the forecast is 10 to 12,000 metric tons on the London Metal Exchange is the forecast medium to long term. Apparently, this should actually even go as high as $15,000 a metric ton. So you can see how urgent it is for Zambia to ramp up its production as well. The first 8 months, we talked about it, production did decline. We're looking at about 475,000 metric tons. And I did give a forecast last year, the expectation that the numbers will not exceed 720,000 metric tons. Of course, there is 2025 could see 850,000 metric tons, and 2027 we should be getting to 1 million metric tons. And as we get closer to 2031, 2033, we should be getting closer and closer to 3 million metric tons. Mining is very critical. We've talked about most of the projects. I know I talked about a lot of them before we even got to them. Company is back online. Konkola Copper Mines. You've got your Lubambe Barrick Super Pit was launched. You've got First Quantum Mining. A lot of those projects. You've got your Shaft 28 under China non-ferrous metals. You've got a number of explorations that are going on, and these are expected to support the production targets, create employment, and also bring to life most sectors that have pretty much just died. So we expect construction, real estate, energy, all those sectors to just come sort of to life. There was also talks about a special purpose vehicle, which will look into future explorations in critical minerals and will take up 30% ownership. Zambia seems to have gotten to a point where I think that it has learned from its past mistakes, especially when it comes to negotiating shareholding that will allow for tangible benefits, to trickle to not only the state, but to Zambians as well. So I know this was received with mixed feelings. Something similar was attempted in Botswana. I think in Botswana, their shareholding was higher than 30%, and I think it's something that is going to be reversed under the current regime. But I think the spirit here is that if we're going to get these minerals mined in our backyards, then the expectation is that the average citizen must get to feel the benefit of the resources that reside in their country in terms of education, in terms of cash flows, taxes, and all that to the government. One thing that I just want to mention that is very much linked to foreign exchange market is because there's always this question that people ask and say, production was high. copper prices are high, but how come we're not seeing the exchange rate strengthening? So one thing that interestingly happened was a few years back, the mines, there was a law that was passed that now dictates that the mines are supposed to pay the mineral royalties in dollars, and they pay these mineral royalties directly to the revenue authority that has an account at the central bank. Is this a good thing or a bad thing? I would say, I said this before, it deprived them open market of 55% of foreign exchange. What that means is that previously the mines would get their dollars, they would sell their dollars and offload them on the market, and then banks would then give them kwacha, which they then use to pay taxes. That's the time when you could predict that when it gets to the 15th, you would see an appreciation and things like that. That does not happen now. So those things have got their own pros and with their own cons. So that's the answer to your question around why is it that when copper prices are high or when production is high, we're not really getting to see the benefits of this production on the exchange rate. Is because whatever is collected just goes straight to the treasury and adds on to building reserves. So you get less foreign exchange on the open market. So few conversions, and if you have few conversions, then definitely you're going to not have the benefits of seeing your currency sort of strengthen and appreciate within stipulated times. Lastly, there is a project that's going on. $160 million was put aside. This is a geophysical mapping exercise which is in progress. What is geophysical mapping? The state, through the Ministry of Mines, is taking stock of the actual minerals that Zambia has. The difference between this geophysical mapping and the one that was done in the 80s is that the one that's being done now has the benefit of AI or advanced technology compared to where technology was in the 80s. So it's actually believed that there are more minerals than we think they are in this country. So hopefully when this exercise finishes, we will know about new sites where minerals are, if there are any new minerals that we have in Zambia that we didn't know about, and then that can then inform any mining strategy, any investments, and hopefully if that comes up, then we expect that Zambia will attract more and more investments in mines. This just shows the production month on month, and you can see that production started picking up in August 24, and this was the last data that was publicly available in terms of production as well. But you can see that it picked up from 60 to 70, and this could actually be because of these other mines that are now beginning to produce more. Like I said, Mopani is producing and all that. So we can see a little bit of the benefits here and there, but we expect to see a larger impact in the second half of this year. I deliberately shared this graph to just show you how mining is gathering important presidents around a table. So you can see the outgoing US president there with the DRC, Zambia, and Angola presidents and other officials. That graph you're seeing there is showing you where the Lobito Development Corridor is going to pass, and the US has pledged to fund significantly there. And then you can also see Tazara, which is the red line there, where the Chinese have also said, you know what, we're stepping in. So the benefit of these rail lines is that it's now going to take shorter time for copper or minerals or whatever is being transported to get to the western coast, rather than putting those things on trucks and then they have to go all the way to Durban, and it reduces the distance, efficiency. When you open up ports like to the west, you can then start to do business with the likes of Brazil faster and and all that. So you can see that the US is very much interested in critical minerals such as cobalt, nickel, copper, lithium, and manganese as well. So we are at a very critical point of the economic life cycle, and clearly Zambia, Democratic Republic of Congo are the center of attraction when it comes to sort of this project. So infrastructure is something that is also pretty much coming up. So I'll take any questions if there are any on the mining slides.
Okay, thanks. Chair, please go ahead.
Thank you again. Always my interest is in mining and copper. You almost touched to it, but I think you went to give an example on Botswana about the sharing ratios. I'm not sure if I missed it. You didn't complete to tell us what the sharing ratios, the new agreements they are signing. What are we looking at? Because I think that is where the outcry is. When you go to Northwestern Province in Kasempa, this is where they are using the roads to transport copper, going to Welvis Bay. But when you see the road infrastructure in there where the copper is moving, it is a sad state of affairs. And some of us believe this problem is associated with how much we share. Currently, we only retain about 10% of the revenues which come from the mines, and 90% is taken by the international companies. From what you are hearing, the new agreements which are going to come up, what are the signing agreements looking like as in the ratios are concerned?
Thank you so much for that question, sir. It's a very difficult question for me to answer in terms of, I don't have sight. I'm not privy to that information, but I do know that there was a reaction from the mines. And it's something that is sort of still in discussion, because it's one thing to make strides towards increasing your production. I think it's another to get the same minds thinking, okay, we've opened up this side and we're investing, but then why are you doing this? You know, to us, this is a bit too much, because we've seen in other jurisdictions how this has not sort of played out. So I'll be very honest, I'm not privy to those discussions, but I do know that the mines did sort of push back. And I think it's a very delicate issue where I would say the authorities are a bit cautious in the way they are dealing with this issue. You don't want to get the mines on the wrong footing, because then you would start to chase away potential investments. But that would be my opinion. In terms of infrastructure, I like the point that you've raised, but I think that if the mines are using the roads and we have all these heavy equipment and machinery that are using our roads, I am made to believe that that has nothing to do with a revenue share, but has everything to do with the National Roads and Funds Agency, because we now have toll gates. Zambia has toll gates. I'll give you an example. This coach track that was headed to FQM, I don't know if it's Barrick or FQM, all the way from passed through Namibia, got through Zambia, and took its time to get to the mines. I think paid a total of about 13 million kwacha in road taxes. So I'm meant to believe that is the amount of money they paid to clear it and to get it to move on these toll gates. I think it's more of a question, are those collections then channeled towards what the money should be used for? Because it's one thing to collect, but it's another to go and refurbish a road. So if we are collecting and we're not refurbishing roads, then I don't think the problem is a mining problem. I think the problem would definitely be more of a public sector problem. So how can we address that? How can we create that level of accountability to ensure that infrastructure is, serviced, replenished, and that kind of view? I don't know if I've answered your question, sir.
I think you did. The only thing I would probably say is to Zambians, Globo as a cooperative and other in the diaspora, we should take interest in this question of the sharing ratios. Our friends in Saudi Arabia, it is the other way around. They keep 90% of the resources and 10% goes to the foreign investors, and see how much they have developed their nations. On the other hand, we Zambians, we, like you have rightly said, they don't want to go on the wrong foot of the investors. But guess what? If we started to play a long game and we told them, whoever doesn't like our ratios, you can pack and go, they need our resources. They will come back, and we'll probably, we just need to be tough and looking on the long view, rather than let's eat today, which has, I think, in my view, given us all these problems we face. But you've answered the question. Thank you so much.
Thank you, sir.
Any other questions? Oh, okay. Vicky, please go ahead.
Thank you, Simon. Thank you, Mr. Zulu. Mine is on the understanding that I now have regarding the base load that would powers the mines. Initially, I thought the mines would also run on solar, but it seems not, because it's mostly electrical. And I assume with the erratic supply of power, they probably are running generators. Correct me if I'm wrong. Anyway, my question is on whether Zambia has been in talks regarding nuclear power, which is another alternative source of the baseload. Has there been? Thank you.
Thank you, ma'am. Let me start with the last question you've asked. Has there been talks? A couple of years ago, there was some atomic agency that was sort of set up, led by the late Dr. Msiska, or I don't know if it's Msisha. Yes. I know that Zambia had started to send students to go and study nuclear physics and all that, but that has just gone quiet for now. What really came out of that was that to develop a nuclear plant to generate power would take 15 to obviously 20 years, and the outlay, and it was a cost issue, and all that. It needs a feasibility study, which is a viable option because yes, it has worked for other people. Not so sure what a feasibility study would bring out, let's say, if it was for Zambia. The mines, you rightly put, you can't mine on solar. Solar can help you with lighting and maybe light items of issue, but real mining, pumping water out and ensuring all that heavy equipment and all that needs baseload. And what's happening right now is to some degree, the mines do use gensets, but the mines have gotten into agreements with, they've already got agreements with the likes of ZESCO, the CECs, and at the same time, ESCOM. I know that FQM did work with a company called Africa Green Co, and they were able to broker a deal where they got about 125 megawatts coming from ESCOM straight into FQM because they needed this for production. That's how it pretty much runs. Thank you.
Thank you.
Right.
Mutsonga, that's a question.
Yes, sir.
Do you have any information on what Kajem are doing? There was that story about them stopping to mine because the market was flooded, I think, something like that. Do you have any story on that?
Not really. I think the only information I have is the same one you have around. I know that the concerns around the emerald industry have been there for quite some time. Probably, I think this time it maybe just came at a time when other fundamentals are just not in place, and it just made it very, very difficult for emerald mining. the auctions, there's always been this argument around why is it that we're getting these stones from Lufanyama, but we're not auctioning them in Zambia. They are being auctioned in India and all that. So is it a capacity issue? It's never really been clear. But for now, it was believed that the market was flooded, and it's not very clear. So I have the same information that you have around this sector. Yeah.
Okay, thanks. Esnat, got a question? Please go ahead.
Yes, thank you, Mr. Zulu, for this enlightening presentation. When you finished presenting the mining sector at the bottom there, you talked about further exploration of the mining sector. I think there's also a concern of, we've been independent for 60 years. The mining sector has been the backbone of our economy. And in general, most Zambians, the average Zambian feels like the mining sector really hasn't done much for it. My concern, and I think there are other people who have the same concern, is that this further exploration of more mining activities will affect, like displace people and have an impact on the ecological, just the environment. I know you're in the banking sector, so there are other sectors that have been dealing with this. I don't know how they're going to, like encourage or just make the average Zambian feel like if they opened more mines, people will benefit. Because what do they do with the environment and the displacement of people? Because like forever, we've been talking about replacing mining with, go back to the land, let's encourage people to farm. So now let's say if the exploration goes through and they discover that there are a lot of minerals where people are farming, what's the way forward with that? What do we do with our economy in that case? Because then we'll be displacing people who have decided to go back to the land, right? Who are trying to produce food. That's just something I was thinking of as you were, talking about the mining sector. Thank you.
Thank you, ma'am. I couldn't have said it any better. I may not have all the answers, but what I know is that mining now is under very strict environmental standards. Previously, it was easy to mine and leave the dumps and all that, but I think now with this ESG era, we see more of the likes of ZEMA and pressure groups coming up to really hold the mines accountable. In terms of displacement, look, it's I would say there have been a few examples of where, yes, copper has been found, but it's in a game pack. So now the trade-off is, do you preserve the animals or move them somewhere and forgo the copper? And people say, look, the benefits that you get from mining surpass wildlife. Why can't you relocate the wildlife? And those are valid concerns that you sort of bring in. I think that the most important thing is there is more realization that if you go to the copper belt and you look at the states after KCM shut, after Mopani slowed, when Glencore pulled out, was it they sold their shareholding to the government? You can actually see that you don't even need to calculate. You can tell that unemployment is a problem here. The state of the roads is dilapidated. You don't get that level of sponsorship, maybe for hospitals, soccer teams. It was very evident. So with the new mines coming up, with the old mines getting fresh injections in terms of capital and all, you can see that the average Zambian is getting to appreciate that there'll be jobs. And there are also these policy provisions that are very deliberate around, you need to ensure that X percentage of people that you hire are Zambians, because I think it's a deliberate drive to get the average Zambian to benefit from minerals that are mined in their backyard. I can say more can be done. I totally agree with you. And that's where the work is. And only hoping that we could obviously do more for the average citizen, for it to make sense when it comes to things like mining. And I think it takes us back to where those special purpose vehicles now want to say for new mines that will be opened, I think that shareholding must be significantly high, because previously we had a lot of mines, but the shareholding by the state was very low, such that even if a dividend was paid, it wasn't really going that far. And just holding mines to a higher, standard. So I appreciate your points. You highlight very key areas that should be looked at. Thank you.
Thank you.
Okay. Yeah, Mutsunga, I think we can continue. There are no more questions.
Thank you. Okay, so then we go to what I would deem the financial sector, which is a monetary policy as well. So what we've seen is because of the droughts, so the droughts in terms of agriculture is generating credit risk. Most farmers that were on the farming facilities, the Sustainable Agriculture Facility Fund, were not able to pay back because most of those farmers that planted crops didn't grow and they got destroyed. And because of that, that then generated credit risk pressures. There were needs also coming from a lot of farmers, especially with regards funding for irrigation, to be able to water their crops in winter. And that was a point of call. So the financial markets, the monetary policy by the central bank is clearly evident of drought effects. The power issue has contributed to rising inflation. And when inflation starts to rise, it's a sign that the central bank needs to control the supply of money so they can either hike rates. What we saw in 2024 was very, very hectic. The cash reserve ratio was hiked significantly, 26%. What that means is that banks didn't have liquidity to lend. And all because the central bank was trying to cure a kwacha depreciation problem. So at some point, the kwacha just kept on running away. So the only solution was to step in and limit the amount of liquidity, because the market was flush cash. There was so much cash in circulation and they mopped all of it, but that was not effective enough. So the central bank came up with interbank foreign exchange market rules that then did help cap the exchange rate depreciation. So I would say this last year saw tightened monetary policy. The benchmark interest rate in total went up 300 basis points and closed the year at 14%. The cash reserve ratio was 26%. And that really hurt a lot of banks because banks had to borrow to just be square. So it pushed up the cost. And that's what we saw in that space. However, there's realization that the drought has caused so much pain for SMEs. And that's the 5 billion kwacha that the Bank of Zambia has rolled out. It's called a resilient facility. So that allows for banks to be able to get funding from the central bank at concessional rates and then lend it to SMEs who are customers. So I just want to be very clear about this, because a lot of these times when these facilities are announced, people think that they are for everyone. You obviously have to be a customer of the bank as well to be able to benefit, and they are short-term in nature. There was talks around de-dollarization. It was also believed that the reason why the kwacha was really under pressure was because everyone thinks in dollars. If you run a shopping mall, you want to charge rentals in dollars, but the people that are renting your mall sell their products or their merchandise in kwacha. So there's a mismatch there. It was also believed that there was a lot of speculation as well. We live in a country where when the exchange rate is moving in a different direction, even people that sell products that are not related to the exchange rate, such as tomatoes at the market, they will tell you my tomatoes are expensive because of the dollar. So yeah, we expect to see the kwacha remaining under pressure in 2025. I don't see, in the first half of the year, I do not see anything significant that will solicit a different direction. But what I can say is that the central bank is in a better position to intervene in the markets in terms of any pressure, because their reserve levels are fairly healthy, and that should sort of moderate the impacts. I expect to see tighter monetary policy because of depreciation pressure. The only thing that could change the status quo is that if it does rain significantly to improve the power situation and also improve agriculture produce. But for as long as inflation remains high, the Bank of Zambia would definitely keep monetary policy tight. However, they have to balance it out with growth, because sometimes when you over-tighten your monetary policy, you then eventually stifle growth. And we've got a growth target of 6% for this year, and that's just a forecast. Forecast change every quarter. You could get a different forecast, and it could be lower. Just like last year, we started the year with a forecast of 4.7, and then it moved to 3 point something, and then it went to 2.1, eventually ended at 1.2, depending on what the fundamentals would pretty much look like. So the central bank are very key. Those are some graphs that just, I've talked about the interest rate, which is 14%. I've talked about the exchange rate, the cash reserve ratio, and de-dollarization as well. So the central bank has really taken its time on de-dollarization, because it didn't play out very well a few years back. When they tried it, it actually contributed to investor flows, exits, and the like. So they set up sessions where they were asking for inputs from almost everyone in various sectors, for those that thought they would need exemptions and all. So right now, the central bank is at a point where it needs to sort of make a decision. The quote that I put there refers to de-dollarization, but it came from the IMF, because there seems to be this misconception around people saying, no, could it be the IMF? And the IMF said efforts to promote the use of domestic currency in domestic transactions should be accompanied by market-driven incentives. Once macroeconomic stability is consolidated, hedging instruments to manage FX risks are available in the private sector, and prudential regulation is in place to help internalize financial risks. So what they're saying is you don't just wake up and impose de-dollarization, but you need to back it with some sort of macroeconomic fundamentals. There has to be some stability here and there. So if there's any volatility, buy hedging instruments, because if you start implementing things, it could have detrimental implications on a number of factors. I've shared what the exchange rate graph looks like. It's a seesaw, hacksaw. We do get some interesting swings here and there, but there's been quite some interesting stability that we've seen. Depreciation is there, but it's a slow pace. Then the government security curve, for those that are interested in buying bonds, I think that our bonds do remain attractive. Yields have actually come down significantly. There was a time when 15-year paper was close to 28%, but that has obviously come down, because I think the central bank is really under pressure to bring the curve downwards and to lower interest rates. But I would say for now, you have your 91-day T-bills paying you 11.5%. If you put money in 1 year, you're going to earn yourself 15.5%. On the bond side, you've got a curve. 2-year money is 16.5%. 3 years is 20%. 15-year money is now 23.5%. And if you're looking at 10-year money, you should be able to earn about 22.5%. I think these are decent yields. I always advise that when people are outside Zambia, the biggest factor is usually the exchange rate, because even if you lock up your money in a bond, when you get your maturity, at what exchange rate are you going to exit? But for locals seeking to invest, it's really about inflation, and we're seeing inflation push upwards. So when inflation starts to go up, then I think it erodes purchasing power, because if you're local, then your purchasing power is local. So you should be worried. So locals should be worried about inflation, and diasporians need to worry more about the exchange rate. I'll take any questions if there are any on monetary policy.
Mudisunga, there's a question before Vicky, you come in. There's a question in the chat from Ivy. She says, I'm in a noisy place, so she's asked for her question to be typed. But she says, what has been the driver for too much cash in the economy, if she heard you right? Is it huge CDF cash injection, or what is it, since most sectors are still under stress?
The answer to that question is it's bond maturities. So what happens is the decisions we make today have implications 5 years later. So for example, a number of bonds were issued years back and the maturities just fell together. So it looks, and that's government borrowing. So when you go and sell a bond, you are lending, when you go and buy a bond, you're actually lending money to the government. So the lendings that took place years back, maybe 5 years ago, were now maturing. And when it matures, it means the cash now gets back into the system. So that's what I meant by some of these actions we take today have lagged effects, because you're only going to see the effects in the next coming years. So too much cash was coming from the bonds that were issued years ago. They were all maturing. And those maturities add to the stock of cash within the environment. And that is what also causes depreciation pressure, because if you have too much cash, it is that same cash which you use to want to buy dollars. And yeah, so that then starts to cause depreciation pressure. And that's why the central bank steps in to mop all that cash through higher reserves, because the less cash there is, the less purchasing power there is, and the less the demand for things like dollars or purchases, and then they're able to curb inflation and exchange rate pressure. Yeah.
Thanks, Vicky. You're next in line. After Vicky, we'll take the question from Margaret, then we'll move on.
Thank you, Simon. Thank you, Mr. Zulu. My question is to your last point on the exchange rate in your presentation regarding the bonds and the maturity. Of course, at maturity, the money is returned. For those who are in diaspora, the exchange rate is a factor, a big factor, because looking at the time when Globo started investing in the bonds in 2022, the exchange rate was 17. Now it's nearing the 30s, right? So my question is whether Bank of Zambia has a facility or an option to lock in a particular exchange rate.
Thank you very much for that question you've asked. So let me answer your question in reverse. You can't determine what exchange rate you want to operate in if you're running a free float. So what we have in Zambia is called a free float. We allow demand and supply to determine the exchange rate. There are different regimes, like in Malawi, where you can wake up and say, I want the exchange rate to be at 150, and you peg it. It's got detrimental effects to do that. That is more like you're tampering with the market. The role of any central bank is price stability. Price stability does not mean that your exchange rate should be fixed. And if it's 17, it should be 17 the entire time. No. Price stability means that even if there is depreciation, allow the depreciation to slow down and not to be very rapid because it could hurt businesses. When you're running a business, for some businesses, depreciation is good for them, especially those that export. You can imagine the likes of cement producers. They export to the Great Lakes and they charge in dollars. So if the exchange rate is depreciating, it means that when they bring their dollars here, they will get lots of kwacha, and those ones will smile. Farmers who export, they smile. But for those that import, it's costly. So yes, the exchange rate was 17 at some point. It's been graduating, and eventually we are at 28, which is just 2 points below 30. So the question we should ask ourselves is, what has really driven this exchange rate? The biggest challenge we have, and I would like to explain it, hopefully, for the benefit of all, is that we view the exchange rate as the job of the Bank of Zambia. It's yes and no. I would like for you to view the exchange rate as a barometer or an indicator for the state of the health of an economy. It's like when you go to see a doctor and the doctor tells you your temperature is 28. In this case, I'm using 28 as the exchange rate. Your temperature is 28. The temperature on the thermometer tells you something. So then if my exchange rate is 28, that is my thermometer. What is it telling me? It's actually telling me that I have more demand than supply. If my exchange rate is depreciating, there is a problem. That is a mismatch. Why would you have more demand than supply? Then it means that your economy is predominantly import driven. You import more than you export. But what would drive people to import more than what we export? It means that we're not producing much. And that's where now the value addition question comes in. So when we start to unpack this, and these are the kinds of discussions that need to be had at chambers of commerce, at PPDFs, to say, this is the problem we have. We have so much. What are we importing? We're importing toothpicks. We are importing a lot of things. We're importing milk. Do we not have these products in Zambia? The sooner we get to understand the granularity of the demand and supply fundamentals, trust me, the better, then we'll be solving a problem. The central bank only comes in as a last resort when these structural issues are manifesting. The central bank then says, what can we do in the interim? Whatever the central bank does is an interim measure. It is never permanent. So I just wanted to give that understanding to say, yes, today the exchange rate can be 28, but if the central bank did not do anything about it, you would have been talking 45 today. It would have been worse. It's a theory of relativity, and I always bring that angle. So the central bank has really been pushing to say, these are the stats that we have, and that's where now the private sector come in. It is the private sector that drives growth. The more industries we have, the more production we will have, the more value addition we will engage in, the better. Because when we start to export things that are of greater value, we start getting more foreign exchange that will come into Zambia to improve the supply question. Right now, when we talk about FX supply, we talk about the mines. But the question is, are the mines the only sector that are able to export? What about agribusiness? What about beef? What about cement? What about all these other areas that we can export to substitute and or to complement the mines? And that is what our thinking should be. And if we don't address that problem, you will have a central bank that comes in to hike interest rates, suck money supply, but choke a business. So they are faced with very difficult choices. I can suck money out of the economy and stabilize your exchange rate, but I will choke your business. You will have no liquidity. So the question is, what do I prioritize? You having liquidity or exchange rate? I'll end by saying the biggest mistake I have learned in my 19 years of banking is that people proxy exchange rate for growth. In Zambia, when you see your exchange rate very stable, you should be worried. When your exchange rate is stable, it means there's very little economic activity. Because economic activity for a net importer means that you are going to be seeing equipment coming in, and all that equipment needs to be paid for using dollars. So there must be growth in Zambia is linked to depreciation pressure. When you start to see depreciation pressure, then you should know someone is buying fuel, someone is bringing in equipment, someone is bringing in. That's the structure of this economy. But we need a paradigm shift in thinking, and this battle will not be won in one day. It requires everyone to come to the party. The simple question is, how do we increase productivity to change what that barometer is telling us? If we don't want the barometer to move from 17 to 30, there's something we need to do. We have not been doing it for a long time. I hope I answered your question, ma'am, and my examples.
Very clear. Thank you so much.
You're welcome.
Okay, Margaret, your hand has been up a long time. After Margaret,
Yes.
we'll move on. Yeah.
Yes, thank you so much. Thank you for the presentation. Thank you for clarity, and thank you for, these things that we did not know what is going on. So we say thank you. My question is, I don't know, maybe I missed it because I was in church when you started, but I joined in and I got a lot of things. My question is, for those Zambians that there's been a lot of discovery of new mines, especially in Solwezi, Copper Belt, somewhere there. Those people that settled on those mines, where the new mines are being discovered, are they compensated? The reason why I ask is this: here in America, when there's oil under your house, they discover there's oil under your house, you benefit from there actually monthly, because you cannot lift your house from there and take it elsewhere. So they give you, it's like you are benefiting. They give you, I don't know whether I can call it an incentive, but they will be paying you monthly, because this happened to one of my sister-in-laws, where they bought their house. They found that there was a mine. They found oil, and they've been paying them ever since. The reason why I'm asking is that those people, for instance, if somebody has got a farm, or they have got a house where they find the minerals, are they compensated? And the reason why I'm asking is that in Lumwana mine, when they started, there was an area where they touched, and there was this friend of mine who I knew. They had to relocate them. They had to buy them a new place and give them some money. I think they gave them about $500,000, something like that. Does that happen to those new mines that are mushrooming in Zambia, that are being found? Are they compensating the people that were originally there? Thank you.
Thank you, ma'am, for that question. I think what I know is that if a mine is discovered and then people are sort of settled on it, there is some sort of compensation. I'm not privy to the full details. The structure may not be as is in the US, where there will be continuous incentives given, but I do know that anything to do with the displacement would obviously require some sort of compensation, but that's as far as I know, ma'am. Thank you.
Thank you.
Yeah. Okay. Thanks, Mutsunge. Please continue.
Thank you so much. So the next would just be agribusiness, and I think on agribusiness it's fairly straightforward. We had the drought declared as an emergency and disaster. We preliminary had about 1.1 million hectares of planted land destroyed. Agricultural produce declined 56%. Yeah, and then I think what's clear in 2025 is that continuation of the Comprehensive Agriculture Support Program will continue. And maybe let me just explain this paradox. So for the longest of time, Zambia has had structural issues within the agri sector. If you ask anyone today in terms of GDP, they will tell you that GDP contribution from agri does not exceed 3.5% in Zambia. But then this is a huge disconnect because you're looking at a country that has got arable land and got a lot of water bodies. So the question is, where have we been getting it wrong? Much of what is grown, especially in the area of maize, is like in Zambia, when you talk about agri, the first thing that comes into people's minds is maize and corn. They don't speak about other crops as much. So 95% of the corn that is grown in this country is grown by small scale farmers, and they've been feeding the nation. The question is, why haven't commercial farmers been growing maize? The reason is because maize is not a profitable crop. If you ask a commercial farmer, it's only now that we've seen maize prices go up and commercial farmers are being enticed into growing more so that they can help show up inventory of corn, especially in the wake of drought. So a lot of people that have been small-scale farmers have been small-scale farmers from the time they started farming, and they've never graduated to commercial farmers. Reason being because the market structure of commodities is not fully developed. We don't even have sort of clearly defined commodity trading. The FRA, which is your Food Reserve Agency, has been reduced to some sort of a de facto trading exchange, if I can call it. What I'm saying is, if small-scale farmers grow maize and they've got excess, they end up selling the excess to the FRA. That buys, and that's what I would call a floor price. So they sell their maize, and the FRA buys it at a floor price. It's very painful because you have jurisdictions like the Democratic Republic of Congo that is able to pay close to 10 times whatever small-scale farmers are getting from the FRA, but these small-scale farmers don't have access to those markets. That's another opportunity. So agriculture has been more demand-driven, characterized by price fixing. So it's always been about at what price is the FRA selling maize, and that's what would determine the price at which small-scale farmers would sell their maize. And you can understand that any government will worry about the plight of its citizens, especially small-scale farmers in the villages, because if you don't buy their maize, then no one else will. Or you leave them exposed to briefcase businessmen who buy their maize at very, very low prices and go and sell that maize at 10 times the price in the DRC. So the Comprehensive Agriculture Support Program is a new program that has been redesigned to shift the focus from the demand price fixing posture to the supply side, which is aimed at creating wealth. And it started with an adjustment in the price of maize higher. And that's why mini meal prices were high. So that is to stimulate small-scale farmers to grow more, because then if they're getting a higher price from selling, they will be encouraged to grow more and to maximize their output and get a little bit more. But then this program is characterized by a bit of infrastructure development, building of roads, because it was established that it's very difficult to get produce from the villages all the way to markets. So roads are going to be done. Power lines are going to be put. Irrigation. Power lines were actually for the purpose of center pivot irrigation to try and help commercial farmers then engage in, irrigation and all that. And when this happens, it is believed that we should see a shift and agriculture would start contributing more to gross domestic product than it is right now. I've talked about the misfortunes of the Sustainable Agricultural Finance Program, where people grew crops, but then because their crops were damaged, they lost out. The banks are now left with credit risk to deal with. We also have livestock. Livestock has been hit by drought. Of course, drought affects grazing land, and grazing land obviously will affect the life cycle of beef cattle, dairy cattle, and all that. So that's another area to sort of look at. Disease is year in, year out an issue, from bovine pleuropneumonia, swine fever, foot and mouth disease, and disease support has continued. It's on the government agenda. And a pronouncement that was made last year was that Zambia will set up a plant that will now start to do its own vaccines for this. That's another opportunity. So they start to do their own vaccines to help curb some of these diseases. Zambia is also positioning itself to be a beef exporter. There is a disease-free zones that they're setting up, and these should help with actualizing the beef exportation idea or initiative. So we expect that these drought effects will obviously filter into this year from an agric perspective, unless it does rain significantly. I'll give an example of something that I experienced last year. We visited one of the clients that was dealing with sugar. And when we asked them what the impact of drought was, they said, no, this drought actually came at a point when sugar had already passed that stage production. They are more likely to feel the impact of the drought this year. I'm emphasizing the lagged effects. Sometimes you will not feel the effects in the actual year that you are, facing the drought. You get to feel the effects in the following years. I'll take any questions if there are any on the agric slide.
I have a question.
Oh. Yes,
sorry,
please.
I'm on mute. I was trying to find out, what about avocado farming? How does it pan out with drought? I don't know if you have any idea about that.
I'm not very sure about avocado farming and drought. I have very, very little knowledge in that space, ma'am.
Thank you.
Okay.
Okay. Any other questions?
Ms. Moderator,
Yes,
the participant asked, I think, in the last sector. If you could read it up for me. Sorry again, I'm in a noisy place. I'd asked a question, I think that...
Yes, Ivy, you had asked a question on the last topic. So I did indicate, I responded that I'll ask him to respond to you at the end of the presentation. So if we can focus on agriculture for now, then we can move on. Yeah. Any questions on the last sector, agriculture?
I'd put up my hand actually. For mine, my question is really more on not just agriculture, but on all the sectors. Can I go
so who's speaking? Is that Margaret?
Yes, it's Marjorie.
Marjorie, sorry. Okay.
This is Marjorie. Yeah. So can I ask, because mine is to do with all the sectors?
Okay, go ahead.
Yeah. So my question is, in your opinion, which sector do you think is ranked the highest in the area of high production? That is throwing in all the mining sector, energy, agric. Which area do you think, in your opinion, is ranked highly, where production is involved? That is investment. If somebody is thinking of investing in any sector, which do you think is the best area for production, high production? Thank you.
Thank you, ma'am. Ma'am, you've asked me a very difficult question. I wouldn't per se point at one sector. People have different investment appetites. People choose to want to invest in things that they are more conversant with and where maybe they have expertise depending on the type of investment. I would say from a manufacturing perspective, there's been quite some improvements in manufacturing, especially stimulated by those multi-facility zones where people are getting tax holidays and all. That stimulates people to mining. is one sector that I would say it's a very interesting sector. This sector, it does not, it doesn't matter whether your debt has been restructured or not, because most of the big mining players don't borrow from Zambia. So whether or not there's debt restructure or there's drought and people will still come and mine, that's another sector to sort of look at. Energy as well is very critical. Right now, I'll say energy is a hot cake. Like I was saying, there was a financing gap. And so if anyone has investment appetite in energy, I think it's a winner right now. It can be within renewable, the likes of solar. People are investing as small as not very complex projects, like people are in need of solar panels and all. So you find that there are people who've taken that up as a business. People are installing solar panels for companies, for corporates. People are powering branches. I think we just did most of our branches, you can imagine. So that's a business opportunity, because right now anything to do with what would just bring in some sort of electricity, whether it's from base load, whether it's from solar, has a market. Then for those that are looking at FCMG, I mean, I always argue to say, irrespective of how hard the economy is, people still have to feed. So people are running, we're seeing supermarkets opening more and more stores despite the drought. So I wouldn't sort of put one sector and say this is a sector that's got the most production. I would say there are quite a number, but it also just depends on your investment appetite, what your outlay is. But I would say of all of them, or right now, energy is a hot cake. Anything to do with electricity is just a hot cake.
Okay, any other questions on agric? Mutsunga, how many more slides do you have, or sectors do you have?
I have two.
Two, okay. Happy New Year. Okay, I think please continue.
Okay, so I think this slides I've lumped up business pulse. This is speaking to just businesses in general. So as measured by the Purchasing Managers Index, you can see that for most of the year, the index has been in contraction. I think 11 straight months. So when the reading is below 50, then there's contractionary private sector activity. And when it's above 50, it's expansionary. So what really has kept the business pulse in contraction has been, one, lack of energy. So because of electricity, so there was lack of energy. One, there was exchange rate depreciation. Number three was lack of liquidity. I'll explain this. So lack of energy has forced businesses to either take up alternative energy sources. So either get a genset, but then the fuel cost is high. So that is ramping up operational costs. For those that are able to operate within the timelines that power comes, because we have power about 5 to 7 hours. So what do you do to push out the same amount of production between 5 to 7 hours? They go and triple their workforce, but tripling a workforce means that you obviously have to pay a higher wage bill. So that has sent business pulse into contraction, because eventually selling prices are high. Currency depreciation, because the currency has been depreciating, it has kept input prices elevated. And that's your input inflation, which has been high. And what production entities do is manufacturers just pass on the cost to end users. And that is what is causing inflation to go up. Lack of liquidity as well has been a source of issue. Lack of liquidity is taken in tandem with, if liquidity is there, then it's highly priced and it's a cost. So these are the three factors that have been driving private sector pulse. It's affected SMEs, it's affected manufacturing entities, and in short, it's kept inflation pretty much elevated. So most of the things that are on this slide have already been spoken to while we were speaking to other factors in detail. So the question that we all usually have is, okay, why aren't commercial banks then lending to SMEs? Yes, they are lending to SMEs, but what would it take for commercial banks to start lending more to SMEs? It brings in the aspect of the credit guarantee scheme. So the credit guarantee scheme does make it attractive for banks to lend more to SMEs, because the way it works is that it's like some form of insurance. Lend to the SMEs, when there's default, whatever you've lent will give you back 65%. Then you have more banks doing that. The argument has been that the amount of money that is allocated to the credit guarantee schemes is not enough. So in the budget, there was 865 million kwacha, which is just about $33 million. And arguably $33 million would be a drop in the ocean if you look at the entire SME sector in the country. So most of the small, medium-sized businesses are still grappling with credit risk pressure and because of lack of power and with high costs of funding. I'll take any questions if there are any on this slide.
Okay, I think it's appropriate to ask this one that Ivy posted in the chat group. I'll read it out. What is the directional outlook for the exchange rate in 2025 and or 2026, given the forecast fundamentals in the economy? What are the drivers or policies that you think will drive the direction of the forecast for the period in question?
Thank you so much. So the direction for foreign exchange, like I said, in the first half of the year, we should continue to see depreciation pressure. Second half of the year should start to see some subsiding pressure, because the expectations that your mining production will start to sort of kick in. 2026 would be it will be very, very difficult to do a forecast. You see, long-term forecasts sometimes are very subjective. So I would give a 2025 sort of forecast. But what I do know and mentioned is that the central bank is in a better position to intervene in markets. So should the currency become notorious, we know that the central bank does have tools to intervene. And I think that we've seen the central bank always step in when the currency exceeds a certain level. In this case, I think if it starts getting to 29, we should see them then step in. I don't see anything significant that will happen that will lead to a drastic shift in, say, currency appreciation. No, I don't see that. And then also don't forget that because we've undergone this debt restructure, we have to start servicing our debt, and we service our debt in dollars. So dollar demand is still there, you know. So we will get these injections from the IMF, but like I said, the IMF program is expiring in October. So I think we should have a couple of disbursements, maybe three sets of $183 million here and there, but I don't see anything significantly and from fundamentally that should change the current trajectory. In terms of drivers, policies that should see us on an improved trajectory, I would say the consistency we've seen within the mining space is very, very, very critical. The continued collaboration between the public sector and the private sector through the public-private dialogue forum is actually very key. I'm an avid believer of implementation. You can talk as much in conferences, but if you don't implement, then you'll still be back at the same conference talking about the same issues. Very strict policy around what we should expect within the agric sector and the energy sector as well. These are going to be very, very key. I think that if funding for the power utility can be addressed from a policy perspective and say, fine, how can ZESCO be helped raise a lot of that capital to fund some of those balance sheet gaps, it would really go a long way in ensuring that most of those projects that are on the northern part of Zambia come to completion. Because you see, the interesting fundamentals about Zambia is that you have a drought, yes, but 80% of your water bodies are on the southern side. Yet, when you go to Luapula, when you go to Kalumbila, they'll tell you it rains, but you don't even have a power station there. So we have these misalignments. The SME sector is going to be very critical. The more we can get in a lot of funders, and if banks can also play a very significant role. This facility that was rolled out for 5 billion, I really wish the central bank would have thought of maybe rolling out a 20 billion, because I think a 20 billion would have actually made more sense. I would think that 5 billion, which is rather small for SMEs, especially to cushion them from this. There's another sector which no one ever talks about, but it does contribute significantly, and its policy is actually doing well, and if more can be done, is the technology sector, the ICT. Have you noticed that every other sector that you will look at uses some form of technology? So there are all these initiatives such as digitization of biometrics, us getting to digital identity and things like that. It will really, really help propel and, get the economy to move in a particular direction. I would tell you that if you come to Zambia today, you'll be very disappointed with the quality of data right now. Obviously, it's because of the drought and there's no power. So you have your telcos struggling with network and things like that. But we have Starlink now, which is satellite based. So technology is another sector. And if we could get more policies to open up the tech sector as well, I think we'll be moving on to greater production efficiencies here and there. I think that's how I would tackle that question.
Okay, Chair.
Yes, very interesting discussion so far. Two observations which I made when I was in Zambia is that of, number one, money lenders, especially the Chinese, our Chinese investors. They are very heavy in this sector. How attractive is this sector? You are in risk management. If the cooperative like Globo wanted to come in, of course, the rates at which our people are exposed to from the Chinese are much, much higher. But if a cooperative, say a credit union bank, could come in, how attractive is this, and how the risks? What are the risks involved in this sector? Number two, I think we met the MD of Zanaco when I came. The presentation we made was how the Zambian diaspora are contributing very, very low to our economy. In 2023, we contributed 225 million. The Gambia, which has a much, much smaller diaspora population, brings in about 600 million every year. And from your presentations, I'm yet to hear if the bank, you have any focus on this group of people, which can really help offset some of the pain, the exchange rates, which we experience every time. Those are my two. I don't know if there are questions or comments.
Thank you, sir. So I'll start with the money lending business. Yes, the Chinese are into money lending, but the Chinese seem to be a little bit more ruthless in this space because their type of lending is a little bit unconventional. I mean, I know of yards that you open and you find they're full of assets and things like that. They're grabbing properties from people, and there's a bit of distress here and there. So for a general money lending business, I would say, yes, there is opportunity if it's done the right way. If it's a cooperative that, gets a license and the Bank of Zambia grants a license and they're monitoring. However, the cost of lending is very much dependent on the cost of lending is very much dependent on your funding source. Like, where are you getting your funding from usually? So if you can manage to get yourself a cheaper credit line, then it does make sense to then able to lend at concessional rates. I would also say that the sector is also almost flooded because there are a lot of money lenders in
Yeah.
But I think for a cooperative, it would be great. It's risky business. If you want to look at the risks, one would be default. And then even if you do get assets, the question is, how long will it take you to turn around the assets into cash and you recover what you're owed. The question around the Gambia being a smaller country but raking in more diaspora flows. Look, it's got so many moving parts that could explain why Zambian diasporans are contributing sort of less than the Gambia. I mean, it's sometimes it's usually a function of investment opportunities at home. Are people are people doing property? Do they have a long-term view of coming back home and maybe they're building and then those remittances are coming into a country, and all that as well. I wouldn't have a direct answer to that, but I think for my little knowledge, what we're doing as the bank is that we are trying to encourage to open these diaspora accounts that would then encourage diasporians to be able to open and use when they are remitting funds and encouraging them on opportunities. And I think that we should go out flat out because there's a lot of opportunities that sometimes are available, like for example in Zambia or locally. But the question is, maybe it's the awareness gap. People don't know that there's a time when you can get bonds for 28% returns that you will not get anywhere. I mean, in the world, I mean, the 28%, even if you had to convert it and adjust it for $1 return, you would actually find that you will actually get a decent return than out there. But we need to hedge. So we need to narrow the information gap so that people now know what the actual investment opportunities are. Because the only reason I can think of, if a person is not bringing their money somewhere, then it means they're either not aware of the investment opportunities or they've actually found investment opportunities out there. It also goes with investment cultures. Maybe sometimes people's investment propensity and appetite is lower. I'm not saying the Gambia is higher than Zambia, but sometimes it's a function of this. You can have people with a lot of money, but if they are not just into investing, then definitely you would have an issue here and there. I've always known that the exchange rate depreciation actually works better for people who are in the diaspora, because if you're building a house in Zambia and you're sending dollars, it means you're going to get more kwacha for the dollars that you're sending. So you'll be able to do more for your dollars, your sterling, and whatever currency you are using. So exchange rate depreciation for me is a positive if you are remitting monies to your country and if you are locking it up in things like real estate. But that's my little knowledge of the issue. Thank you, sir.
Yeah, no, thanks. Just an addition, what I saw from the Gambia is that the government, they target some of the not only the bonds which we are doing here at Globo, but there are some infrastructure projects which they put on. Say this is for solar or for a bridge or for a road. This bond, they are targeting the diaspora to fund it. I am of the view, when people start to see the physical infrastructure being affected, I think that will also encourage a certain sector who seem to be reluctant when it comes to investing in bonds. They get their coupon back. But if they can see an actual road being done under their name, I'm of the view these are some of the areas people will be invested. My appeal to the bank and to the government is that the money probably will not come by itself. There should be some kind of investment our countries has to make. Right now, we are having a lot of problems here at Globo just to send money. We have to send to a mobile phone, and then the mobile phone, they deposit the money in the bank. We told the MD it will be very, very critical for a bank like yours to invest maybe a million kwacha into developing an app which will allow the diaspora to make the payments into the banks direct without all these, because it creates a lot of work for the people who do the financing. So we need some form of investment to come from the private sector. There is a lot of money. For instance, 225 million, which we sent in 2023. If you take 10% of that, that's 25 million. That goes to paying the fees, just the fees, the exchange rate, and everything. So the banks, in my view, should take an interest. The country should take an interest. But thank you for your response.
Thank you, sir. And I take the feedback. I'll take it up as well. I think you raise a very important point on the app. If we can solution for that, and I think it will make lives easier for those in the diaspora as well. So points taken. Thanks for that feedback.
Thank you.
Okay, there's a question on solar in the chat. A question from Freddie. He's asking if there are any restrictions on importing solar equipment into Zambia. I don't know if you'll be able to answer that, Sunge.
Yes, sir. So there are no restrictions on importation of solar. In fact, one of the incentives is that whoever is bringing in renewable energy equipment and the like, VAT has been scrapped off. So that is to encourage more and more investment in the sector. So there are no restrictions. There is no VAT whatsoever. You just bring the equipment in. Yeah.
Okay, thanks. I think let's continue. We're almost hitting at 9:30 here in Zambia. Oh, Margaret, you've got a question. Let's take a question.
Yes, please.
Yeah,
Are there any headways? There's a lot of water in the northern province. For instance, between Kasama and Imporokoso, there are about 15 or to 16 rivers, and I think 2 falls. Why can't an hydro station be set there so that we can this dependence of only Kariba can come to an end? Is the government doing something about it? Because there's a lot of water in northern province.
Thank you, ma'am. Thanks for your question. So if I take you back to the slide on power, I've mentioned that there is a lot of projects that in the northern province. I think the biggest is 789 megawatts to be shared between DRC and Zambia in Wapula. Chishimba, there's quite a number of them. So what I mentioned was that the biggest challenge they've had is that they've got these projects they've started, but they need funding. So ZESCO is got balance sheet stress right now. So they're looking for either equity partners or funders. If they can find those funders, those projects would then expedite, complete, and then add to increased power generation. So there has been that realization that we've concentrated all these hydro plants on the southern side of the country. But because there's still rain, there's more rain in Wapula, northern parts, the Kalumbilas. So the shift now is getting more hydro projects onto the northern part, but also taking into account that should drought hit the northern part, there is also diversification into core plants. So I mentioned that there's about 1,500 megawatts of coal plants that should complete between next year and 2029 to help add to the power generation capacity. So that, yes, has been looked at. It's just the funding issue. So it's a challenge, but a good problem, which requires a funding opportunity. So if we have funders that are looking to partner with the power utility or any entities that are running these plants, they can reach out and yeah.
Thank you so much. Thank you.
All right.
Okay, we're coming to it's the last one, huh? Is it?
Yeah, this is the last. There's one more slide, which is this one.
Okay.
I've lumped up telecoms, infrastructure,
okay,
transport. So what I just wanted to mention here is that there's some exciting developments. So with mining booming, there's realization that we need to bring back the railway transport. So the government is targeting to refurbish the rail line between Chingola and Livingstone. And of course, there's a Lobito, which we've already spoken about, connecting to the Western Port. The Tazara is also going to be revamped. So you can see that from a rail perspective, these are coming back on board. So there are these opportunities as well. Infrastructure is back. Quite a lot of roads have, are dilapidated. So budgets were put in place to ensure that roads, in fact, priority is commercially viable roads. So you're looking at a dual carriage between, is it Lusaka and Kitwe? That one is being done. And a number of other commercial roads as well of commercial value. Then you're looking at residential roads as well, and part of the infrastructure that will support the comprehensive agricultural support program. Infrastructure had been put on hold. In Zambia, when you talk about infrastructure, it sort of brings a debt connotation, because how we found ourselves in this debt was the debt was contracted for infrastructure development. So infrastructure is now back, provides an opportunity for the cement producers, bitumen producers, and all that as well. And part of the infrastructure as well is looking at the education sector. There's been a deliberate drive to build as many schools as possible to improve access to education for average Zambian children as well. So that is also into account. Hospitals are being built. There's deliberate policies to have cancer hospitals and specialized hospitals to reduce the dependence on people having to be on queues and being taken to India and all that. So those things we sort of discussed. Air travel is another area that is key. I think we are seeing travel numbers increase. Domestic travel is increasing also. There's more flights into the Copper Belt. You'll be shocked that the Copper Belt in a day can attract close to 8 flights. But clearly, you can see there's something happening on the Copper Belt that you can just tell when you go to an airport. There's more travel between Lusaka, Kalumbila, Lusaka, Ndola, and yeah, and also supported by tourism. Internet connectivity is a priority for the government, which is my last point. The government is earmarking to build as many masts as possible, because this supports the financial inclusion agenda. So in those areas where we can't have brick and mortar banks, there are these network masts that will allow for payments to be made. You know, you can move monies from a bank to a telco. You can push and pull using mobile money, and it's empowering people in remote parts of the country and to allow them to have access to financial services as well. So that was my last slide. I don't know if there are any questions on telco infrastructure and the transport outlook.
Okay. Mutsunga, before you proceed, you didn't cover tourism?
Not really. Not really. I usually tackle tourism under the guise of maybe I can just speak to it just high level. So I know that first of all, tourism is linked to the reason why we see quite significant air travel numbers usually in Zambia is linked to tourism, because we do get a lot of tourists that come in, and we've seen a big explosion, especially after the COVID-19 pandemic faded out. Then we saw quite some increased volumes of travel. I think it's evident that we've seen a number of airlines. We have your Pro Flights, your Zambia Airways, you've got your, yeah. So, and the routes are all obviously opening up with the already existing infrastructure that we have, and it's also improving the hotel occupancy as well. That was international, but domestic tourism as well is booming, because I think the policy around having to have conferences in places like Livingstone, you know, in Mfuwe and all, is actually giving a cue to air travel and all. In terms of infrastructure, that has also continued. So this infrastructure also covers tourist resorts, because there's talks around developing those airports which are in the Kasamas and all, and obviously revamping the Kasaba Bay to have it like back in the days. So that is also pretty much happening. There was a grant that was given to the tourism sector, but I think it was about 120 million by the World Bank to help develop tourism sites and all that. But the argument has always been that it's still expensive for Zambians to fly domestic within. The argument is that sometimes a flight domestically is very close to flying from Lusaka to Johannesburg, and that is something that is being looked into. More recently, we did see the government announce the scrapping of visa requirements for people coming from other countries into Zambia. Of course, that would then increase the traffic. But then I think the argument has been that why do we not ever reciprocate? Yes, we are waiving requirements, but then the countries that we are waiving requirements on are not waiving requirements on us to get to them. So I think that's the basic knowledge I have around the tourism sector.
Okay, thank you. I maybe just a quick comment there that the government is also making a deliberate push on what they call MICE. MICE stands for meetings, incentives, conferences and exhibitions. So they're trying to set up to ensure that there's enough infrastructure to attract these big conferences, AU, UN, so that, people come in specifically for conferences, which are over 2-3 days. You get 2,000 people, hopefully that will increase, would push private sector to invest in create more bed space in places like Lusaka, which has Mulungushi, and maybe Livingstone, which is an attractive site for these organizations like LAS, Zika, ZIM, and so on, who want to host conferences there. So there is a big push on in terms of policy on trying to make Zambia an attractive place, the way Rwanda's done, to attract more conferences in the country. Okay. Any other questions on tourism or overall? As we move to wind up, we've done, but in the next 12 minutes, we'll have done 4 hours. Okay, if there are no questions,
Simon?
Please. Yes?
This is Vicky. I had
Hi,
asked whether the presentation was going to be shared. I had
yes,
put
I did respond.
Oh, you did?
Yes.
Oh, I'm sorry. I didn't get it.
Okay. Yeah, I did say I was going to ask him if he can share his presentation. I'm sure he's not averse to it. But Mutsunga, are you going to allow us to share your presentation?
I'll send you a version you can share tonight.
Okay, all right.
Yeah. Okay.
Thank you. Yeah.
Hello. I don't know.
Hello?
Can you hear me?
Yes, yes, we can. Who's speaking?
Okay. My name is Ruth. I did raise up my hand. I'm sorry, my device is kind of not showing my name, but I have a quick question. Firstly, just a comment to actually thank the presenter that this information has been so great, very educational, and something I think we should be having more. This is really, really good, eye-opening. We really appreciate that. At least I do. And yeah, so this question probably is going to be a little outside, but just something that has been, on my mind, or something that I'm really a great concern, really, as a Zambian. And my question is regarding the construction of the dual carriage road between Lusaka and Ndola. Do you have any insights on that, or anything that probably you'd want to share with us? And thank you again.
Thank you, ma'am, for your question, and thank you for your kind words. I'm glad that you appreciate the presentation. I think I think as far as I know, is that road is dilapidated, and it needs improvement, and it's of commercial value. And I have personally driven on it as well. Much of the accidents that we have are because of the state of the road, and there was a deliberate move to ensure that the road is done, and it's also widened as well, seeing where Zambia is going in terms of these mining developments, travel, and or it was felt that the road was narrow. And I do know that part of what is being used to sort of finance the road as well would be the pension funds and other sort of players as well. I know that the road is still under construction because I think they had only graded, and I think it's something that's being earmarked for 2025 because maybe budget needed to be put in place. I'm not so sure if there's a specific area you wanted me to touch on, ma'am, but what I know is that the road is being done, and it's something that is very, very urgent, and it's being done in tandem with the rail lines, because the rail lines are supposed to decongest usage of the road. So some of the things that are being used on the road right now should actually predominantly be transported via rail. So to preserve the road itself going forward, those things will move onto the rail line.
Okay, so do I understand that the construction is actually underway right now?
Well, speaking from what I saw a couple of weeks ago, the land was being cleared. So what's being used is, so what was there's one area that they've opened where they are clearing land, because I think it's going to be a 4-lane, 2 coming and 2 going. Yes. So I went as far as close to Kabwe. I know that the grading had started, but because we had some heavy rains, I think it was put on hold. But they started clearing the land, and yeah, you can tell that it's a road construction area.
Okay, sounds good. That's great news. Thank you so much. I appreciate that information. All right, thank you.
Okay.
Okay. I think we should wind up now and allow Mr. Zulu to re-energize for tomorrow. Tomorrow's Monday. Allow me to thank him for giving us a lot of his time. He's given us roughly about 4 hours, and it's been such a an enlightening presentation. I hope that the Global members have taken time to listen and understand what happened last year, where the economy is, and where it's going. Because the key thing is that Globo was set up to invest in the Zambian economy. And so far, in terms of fundraising, I think a substantial amount has been raised, but the issue was the opportunities. The opportunities have been highlighted, but we also need to understand what risks exist in these same areas that we are thinking of where these opportunities lie. And I think it's a constant discussion we need to have going forward. But Mr. Zulu, thanks for your time. Maybe I hand over to Chair to give a vote of thanks and close the meeting. Thank you, or the discussion rather. Thank you.
Yes, thank you so much, Mr. Zulu and Mr. Bota, for arranging this meeting. The key word, one of the key comments I've taken from you, it's the activities which are happening in the Copper Belt. It was very thrilling to see what is happening over there. Also, the massive planes at KK Airport, which are coming every day, tells me something good is happening in our country. Those in diaspora and those at home, we just need to be alert in the investment realm to take advantage of what is happening. How come all these foreigners are coming to our country? They are seeing opportunities, and yet we, the owners of the land, we seem to be very hesitant, but from the presentation today, we are grateful. Brother Mutisunge Zulu, we are very grateful for affording us this time. We are going to make available this video for everyone, to maybe those who are unable to be with us this evening, to watch it once again. Thank you for your time, everyone. It's been a wonderful time. Have a good night in Zambia. Good day here in the diaspora. Thank you so much. Bye-bye.
Thank you.
Thank you so much.
Thank you, Chair. Thanks, Mutsunge.
Thank you.
Thank you and good night.
Thank you.
Thank you. We really appreciate you.
Thank you, ma'am.